Well, ladies and gentlemen, welcome back to another successful trading day in 2023. AMC stock down marginally on the day, down about 1.5%. We did get bank earnings. We got Michigan consumer sentiment survey numbers that did come out. You had some random news pieces here and there. Overall, not a positive day, not a negative day, really one of those neutral days at best. And we're heading into Friday. I believe the stock market is closed on Monday. We'll have to double check on that. So we are setting up for a longer weekend, and it could make for a very volatile last hour or two of trading, so keep that in mind. But we are going to be going over everything you need to know on AMC stock here in this video, and everything that happened today, including the bank earnings, what JP Morgan and Bank of America specifically have to say about the economy, guys. So let's get into it, guys. We got a lot to cover. Hit that like button and subscribe to the channel if you like making money, or you like AMC, or you just want to see the MOAS, guys. So first things first, let's dive into AMC's Ortex data. So AMC's short interest, as you guys know, is at like a record high, at least for the last couple of years now. It's sitting at 22.18%. These are the live numbers from FINRA. We just got the record date that just came out yesterday, and it was over 22%. So it's indicated to go up a little bit here today at 22.18%. The amount of shares sold short sits at 114.22 million, up almost 500,000 shares here on the day. And the interactive broker short availability is going up as well. Still only about 10,000 shares available to be traded right now, and that cost to borrow rate is 130%. These numbers are higher than Bed Bath & Beyond. They're higher than virtually any other stock, at least that I can find. Now, cost to borrow rates, cost to borrow average at 88.87%, cost to borrow max at 345.12%. So the numbers here definitely looking very healthy for that short squeeze. And as you know from the Stock O tracker data, it's also looking pretty good as far as next week and potentially what that could mean for AMC stock. You do have a lot of contracts on that January 20th expiration. So for next Friday, you have 27,000 calls that are in the money and 455,000 calls that are out of the money. For puts that are in the money, 170,000. Puts that are out of the money, 125,000. So some very healthy numbers from the option chain, and that is really setting us up for potentially a big rally next week, especially if we can get that move to the upside in the broad markets. Now, we don't have as much for earnings that are really important next week. You are going to have Netflix. That's going to be the big one on Thursday. Other than that, you got Discover. That's Wednesday. That could be important. Goldman Sachs, Morgan Stanley on Tuesday, but that's really it, guys. The week after that is where you get into more companies that will be reporting earnings that will be important for the markets. But nonetheless, if we can get that move to the upside, you could start to see a lot of options run into the money, and that could cause a lot of that hedging. So there is that situation. As far as the option activity here today, 67 orders totaling $12.1 million, positive order value of 2%. So not bullish as far as options are concerned. The option flow, I guess you could say, here today, but we know the numbers for next week look very good. If we take a look at the open interest for the put side for January 20th, 37.97% of the open interest is puts, 62.03% is calls. So overwhelming majority of calls compared to puts on the option chain for next week, which is also very encouraging. If we take a look at the markets, we are getting this bit of news that Tesla cuts prices in the US and Europe to stoke sales after lackluster end of the year deliveries, and that did affect Tesla stock a little bit. It did affect the markets at one point when that did come out in pre-markets, but you could see the markets by and large brush that off. This is the 6th straight trading day that the markets are in the green, so you are off to a fantastic 2023. Well better than anyone had thought it was going to be. And this sets you up for potentially another big down drop over the next couple of weeks, over the next month or two, because the markets don't just go straight up, guys. When you're up, I'm up 25% year to date since we started 2023 in my long-term portfolio. That really in reality should not be happening when earnings estimates are only going to be going down once you get guidance from companies confirming that. That's where you're really in a lot of trouble. So I would keep that on your radar. But it is still going to be a little bit until we get those high flyer tech names that will be reporting. Now, just looking at CNBC, we're not going to go over all of these banks. A lot of banks reported today. A lot of them had negative things to say. We're just going to look at the main stories, and that is that JP Morgan tops estimates for fourth quarter revenue, but says mild recession is now central case, and they are also building more reserves for credit losses. And Brian Mohinian says Bank of America expects mild recession and is preparing for the worst. And that's basically what you're seeing across the board. Same thing is happening at Wells Fargo. Same thing is happening with Citigroup. Citi's fourth quarter profit declines by 21% as banks set aside more money for credit losses. You're literally seeing the same thing reiterated through these banks. And when the banks are saying we're in for a recession, we could start to see some more credit losses. That's where you really got to pay a little bit of attention to what they have to say. And the markets right now are 100% not pricing in a recession. And in regards to AMC, I don't really think it necessarily matters, but when the markets do go down, it can put pressure on shorts to cover those short positions, especially as they have seen their cost of borrow rates jump exponentially. Now, the biggest data point that we really got today as far as broad economic data was the Michigan Consumer Sentiment Survey. And the biggest thing that actually stands out is 5 to 10 year inflation expectations did go up a little bit to 3%, but your 1 to 3 year inflation expectations did go down to about 3% as well. So what we're looking at for the overall consensus, at least what markets were expecting, was 60.5 for the Michigan Consumer Sentiment Survey. It came out at 64.6. So it was a big beat to the Michigan consumer sentiment, and that did give the markets a lot of this early day momentum. That came out at 10 o'clock in the morning Eastern Standard Time. So it did really help the markets in a massive way. And that's a big reason why the markets are in the green today and we're not in the red by a big amount, because bank earnings, these things, they were not good. By and large, we're not good. So that is basically going to be all for this video, guys. Not too much else to actually say. It's a Friday. They're usually more docile. If we take a look at the technicals, though, brief look before we do wrap it up. The RSI is at a neutral level of 49.65. The MACD is in bullish territory. And we're just really waiting for that next pop-off. And I do think the fact that Bed Bath & Beyond is down 24.5% and AMC is down 1.79% is a very bullish sign. So that is going to be all for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Most importantly, enjoy your weekends, and I will see you in the next one.